Hey, thanks for tuning in for a few minutes to the Financial Security Planning channel. I'm Eric.Powers, a certified financial planner, and today we're going to talk about good feelings and optimism. It's safe to say that this month, April 2021, was full of a lot of good news. Most of the people I know have concerned themselves with getting the vaccine. This month, I got my second shot of Moderna, and it felt like I had a pretty bad vaccine hangover for about 24 hours. But I've heard that everybody's experience is a little bit different with the second dose. But here's the good news. The good news is that people are getting the job done, right? People are getting that second dose, they're getting vaccinated, whether it's for their own purposes to be able to travel over the summer, or just doing their part to be good citizens. It's hard not to notice that the great reopening is happening around us, right? True, there are pockets in Europe and around the world that are struggling, but on the whole, we're racing towards open. And reopening has some very positive effects, one being that the velocity of money will speed up as we get this stimulus money and pent-up demand. Lots of people have had to use stimulus money simply to stay afloat, while others have used it to pay down debt, or they've dropped it in savings. What's happening though is that people are either getting out and spending the money beyond normal e-commerce spending, or they're making plans to go and spend it as soon as possible. The three things that I just mentioned, meaning more needles in the arms, the reopening cliff, and the stimulus money being deployed, taken together give us a pretty clear sign of a growing economy. One that has a trajectory better than before the pandemic. The US has done a great job of rolling out the vaccine and have had relatively few major stumbling blocks along the way in supply or distribution, which really translates to the US economy accelerating faster than what we would have expected, and definitely faster than the rest of the world at this point. It wouldn't be a stretch to say that we could possibly grow somewhere between 6.25% and 6.75% this year in the economy. That said, this month has also been positive for the markets. The S&P and the Dow continue to have made new highs, while the Nasdaq is continuing to be strong. As we speak, quarterly earnings are rolling out right now, and they're coming through very strong at this point, and we really don't expect to have a lot of downside surprises. Many companies have learned through the pandemic to adapt and how to become more efficient. Those in travel and leisure businesses will probably post some very significant results in coming quarters. So as we turn our focus to the markets, we also want to be mindful that market prices are at very high multiples, meaning their price to earning ratio is high. On its face, in a typical market environment, that could indicate that we are setting up for a market that will draw down to meet a more reasonable ratio. However, at the same time, there's also a good chance that they could just take a pause rather than drop in price, simply because the earnings could continue to grow and fill in the valuations as they are. Most folks are long-term investors and watch for buying opportunities rather than trying to attempt market timing. There's so much optimism out there right now, and there's so much good news already priced into the market, we wouldn't be surprised if there's some contraction or some consolidation. Although the big talk over the summer will likely be more about inflation, it's actually part of the Federal Reserve's plan. It will be at times very high, or even scary through the portfolio effects, but we'll be really watching for the specific details of inflation, really to pick out the things that we were not expecting to see. There's always more to talk about, and I'm glad you watched my April 2021 summary. If you're interested to hear more from me, please subscribe to the channel or ask to be added to my e-newsletter. Bye for now.